Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be understanding the part 2 phase of applications of computer accounting system. We'll be understanding how data exchange can be possible or is made possible in this specific chapter, and we'll be further understanding what is control, budgeting and other features of any computer accounting system. Let's understand each of them in detail. So when we speak about control, budgeting or any kind of planning, we need to have a specific system in hand. Earlier we used to do that. Let's take your homely example, whereby if you have a pocket money or if you have a pocket money or salary of worth rupees 10,000, how would you like to spend that 10,000 for the next 30 days would be your question. So when you have to analyze these things, you need to understand how many expenses you want to do or how many expenses has been a regular transaction, and apart from that, what is the saving that you want to do, or if there are any future needs according to that, you need to understand or increase your saving. So if this is for just one specific person, it would have been easy for a manual transaction. But imagine if the same kind of thing has to be done for a big organization like Tata, like Maruti Suzuki, like any other big Reliance company. So we need to understand that this costing, budgeting and planning needs to have a bigger comprehensive system which can take in different parameters, because for you as an individual, the parameters might be less, but for a company like Reliance or Tata, the parameters might be huge or enormous. So in such cases, when you have to consider different parameters at one single point of time and you have to allocate cost according to that, you need to have a good comprehensive system for your usage. So that's when we talk about budget, control and planning. Let's understand each of them, which will be mentioned down here and which will further highlight for your usage. Let's understand the first point that has been mentioned here. Now, as you know, costing, budgeting and planning, both or all three of them are completely related to accountancy. You need to have good costing, you need to have good budgeting so that you can allocate amount for costing purposes, and you can have good planning as well. So if you have all these three things which are effectively handled using a computer application system, it becomes very easy for you to further organize your organization or to further reiterate your organization in such a way that it gives out only efficiency in such a manner that there is less loss here, or there can be mitigation of loss to a maximum possible extent. Once you know how to deal with all these things, you will further go ahead how budgeting, planning and further costing can be analyzed. So the first part that we'll be analyzing is costing. So when you talk about costing basically relates to any kind of any transaction, or probably the transaction that we have to deal with when it comes to production of goods. So production of goods includes different kinds of cost. For that specific production, you have budgeting. You go ahead and you further budget all the income, all revenues that has been earned in the previous year, all the profit that has been earned in the previous year, and all the cash flow that you have in the previous year. According to that, you further go ahead and budget for the next year. That means what amount will be allocated for which process. You might have different processes running into one organization itself. However, when we talk about different processes being run into one specific organization, you need to know which process or which department requires how much funding. According to that, you can budget that part. If there is certain increase, plus minus decrease that you have to do, you can do that in that part of itself. The next part is planning. Planning is to execute how that specific budget can be made under control. That means just by allocating that specific fund to that specific department doesn't complete your job. You need to make sure that apart from that funding, there is no additional funding that is required here, and the funding that has been already provided, you need to see how planning can be effective, that out of that funding also you can save certain amount for your next unit or next year's planning, or next year's budgeting it may be. So all these things have to be kept in mind when it comes to preparation of accounts or probably usage of computers and applications into accountancy. Let's understand few more details that have been mentioned down here. Now the next aspect that has been mentioned here is production control. So when you talk about production, we always mentioned that unnecessary expenses should be curbed down so that profit can be maximized, loss can be minimized, and we can have enough cash flow in our hand which can be used for further allocation of any kind of contingencies. So when we talk about production control, we need to have a good planning and production control on it, whereby the planning can be in such an effective way that the production can be utilized, or production can be utilized further in such a way that only as per the demand the production is done. It shouldn't be the case that you have produced X number of goods, however the sale is less than that. It should always be the case where the sale is marginally less or probably more than the production that has been done. So if the production has been done for 1000 units for a quarter and if the sale is being done for 1200 units, that is fine, because you might have certain goods in your opening stock as well. However, it shouldn't be the case that your opening stock shows 200 units, you have produced 10,000 units, however the sale is just 1000 units, whereby that specific production which has been done or the production cost which has been incurred in it will be a complete loss if in case that specific product goes out of trend. So what to do in such cases, that you need to have a good control on how much production needs to be done in order to complete that specific sale, or if the production is supposed to be kept on demand purpose. So that is a production planning control that you need to have. Let's understand which other things have been mentioned in production planning. There's a critical evaluation comparison that can be done when it comes to production planning. Critical evaluation. The reason it has been termed as critical evaluation is with the sole purpose that there has been planning involved in this. There has been control or tracking involved in this. If at all there's any kind of error into these processes, which may lead to wrong assumptions, which may lead to wrong data, wrong report presentation, wrong analysis, and which can further doom the company into bankruptcy and closure at the end of it. However, this specific critical evaluation can be further simplified using a computer application if at all you have all the data in hand, if at all that data has been matching the parameters that we want to in the kind of reports that we need to generate. So if you have all these data in hand, or probably all this data in your place, there is no possibility that any kind of production planning control will go waste, or if you have any kind of data, there can be no flaws in making the production and planning control. So this is what you need to understand when it comes to production and planning control. Let's understand what are the things have been mentioned in terms of any kind of budget control that we have, and let's understand the next part of in the next sheet. Now there are 5 kinds of reports that we talk about when it comes to computers usage in applications or computer application usage in accountancy system. When we talk about designing reports, we actually mean to talk about what kind of reports can be used for further analysis or for graphical representation. We will be going through each and every report for your in-depth knowledge on it, and that will be used further to analyze how specific transactions are becoming a part of these reports. Let's go through the first one first. The first statement is financial statements. Now this specific statement is a part of financial accounting. Why is because all the financial statements that we produce or prepare, that may be trading account, balance sheet, trial balance, profit and loss account, all depict all kind of transactions or the varieties of transactions that a company deals with. Now when we have a computer system which can further process these reports in a jiffy and in an evaluating manner, which will show certain categories of transactions and different ways in which that transaction can be represented. So when we have these statements in or probably fitted in a computer application system, graphical representation of huge numbers become easy, because all that data is migrated to graphical chart, and that chart gives you the exact position how the company looks like when it comes to graphical representation. Hence, financial statement is one of the statement that can be used for further graphical representation or data redesigning. Now let's understand which is the next sheet that is used. Cash flow analysis statement. Now when we talk about cash flow analysis statement, the first point that we need to understand that this is a part of management accounting. Now when we talk about management, management is keen on knowing 3 aspects. What is the profit? How much is the loss that we're going to suffer? What is the working capital requirement? This further leads to how much is the investment that is required. So when we talk about cash flow analysis, we basically form a part of management accounting system, which further derives or further is interested or keen on knowing how much cash flow is required. That means what are the expenses that you're going through, what is the income that that expense will bear, and how much cash flow is required so that everyday functions can be performed without any kind of errors or without any kind of stoppage in between. So if to perform one specific action you need this much money, and to perform two different actions, we need that many money. So total cash flow in one specific day has to be calculated, and according to that you can further go ahead and understand how much to allocate to one specific department. So different departments, different cash flow system, you need to record all these transactions. You need to know that there is a humongous amount of transactions that you are dealing with and different departments, and every internal department will have different internal processes which will require cash for their functioning. Just take an example of a bank. Bank doesn't work just on one specific department. It has different products. Different products will have different departments, and different internal department will further have sub-departments in them for their functioning. So when you talk about cash flow functions, you need to understand what will be it that will cost you to run every department one single day, and that's how you allocate the cost for every quarter, every half year, or every financial year. That's how you derive the cost of every department. So this is what the cash flow statement analysis talks about. Let's understand the next statement that we have under our control. Interfirm comparison reports. When we talk about interfirm comparison reports, we basically talk about how many reports are available which takes you or gives you the details of internal departments. Now, every internal department will have different functioning, will have different costing, and will have different revenue generation. When you have two different systems, you need to understand, or two different departments, you need to understand what is the workload they are taking, how much is important when it comes to allocation of department or allocation of funds to these departments. Because when you allocate funds to these departments, you need to understand two things. One, the workload that is being taken into consideration, the output, that means the input and the output. So when you talk about input, you need to understand different categories of inputs. It can be the workload, it can be the employees, it can be the efficiency of employees, it can be the number of employees that are required to perform that specific job. Can that be changed? Can there be a different alternative that can be used when it comes to usage or probably production of any kind of transactions, or different kind of usage processes when it has to be a specific department. So different processes, different cost allocations. When you talk about interfirm comparisons, this report will give you department A has this kind of parameters and this is the revenue generated. On the other hand, department B has these kind of revenue generators. These are the parameters that are being followed. So when all these things are taken into consideration, and that's when you decide which firm or which department will further go ahead with huge allocations of funding or regular allocations of funding. Is there any revamp that is required in each of these departments? Is there any cut down that is supposed to be done? Is there any hiring that has to be done, or any increase in funding that has to be done? Considering all these reports. So inter-firm comparison reports are very important when you have to keep a track on the internal costing. Let's understand which other departments what we have for our reference. That's in the next sheet. The next report that we are talking about is budgetary report. This specifically defines or tells you about the classification of allocations of cost. Any kind of fund or any kind of cash flow that is being allocated towards every department gives you certain budget, gives you certain details about what is the expense, what is the income, what is the revenue generating, whether these departments are non-performing departments, whether these departments are non-revenue generating departments, or revenue or non-revenue generating departments. According to that cases, you need to further go ahead and prepare the budget. So when we talk about union budget, just for example of the country, we talk about numerous aspects that are related to that specific budget. What is the economic development? What is the GDP growth? How much agriculture has been done? How much sales, tertiary, consumer sectors are being used? What is the defense related thing? Every such aspect, all these small aspects are taken into consideration, and that's when a huge chunk of fund is further divided or segregated into these kinds of departments, because every department deserves certain funding, and that funding can be done only if you have a good budgeting control. That means you have the details of the facts that are required, you know what is going on the outer side, and depending on that thing, you further go ahead and analyze whether this specific cost is related to this department, is justified or not. If you don't have these details, your budgetary control system will fail, and eventually you will end up losing a lot of cash flow which could have been further used effectively. Now let's understand the next report that is available. The next report that is into question is operational costing report or operational costing chart. Now, opportunities costing chart is also one of the name for it. So we mentioned down here is opportunities costing chart. Now, when we talk about opportunities costing chart, we definitely talk about differential market pricing. Now, what is differential market pricing or what is differential costing? Differential costing is if you have an example 10,000 rupees in your hand. Supposingly, you have two different jobs that you can perform with these 10,000 amount. So, two different jobs that can be performed. It is not mentioned that you have to perform these two jobs with 10,000, but you can perform either of the job with this specific 10,000. Now, there is one specific job that will yield you 10%, one specific job that will yield you 9%, one specific job where you have to ensure that you need to invest that specific amount for 365 days. However, one specific job that gives you the flexibility of removing that amount any point of time, but the rate of return is just 9%. So which one will you choose is differential pricing. So opportunity is if you get or if you take this opportunity, what is something that you're losing? Can that be afforded is something that you need to decide. So for example, if you're taking Ferrari and if you're taking a Merc, that means you need to understand whether you can choose Ferrari, and if you're choosing Ferrari, is this something that you're losing out in Merc? Or if you're choosing Merc, is there something that you're losing out in Ferrari? So this specific costing that you use is something that is termed as differential costing. Let's keep it very simple. Amount that can be invested into two different projects and the rate of return and the lock period also defines will give you or the parameters that can further define how differential costing is supposed to be performed. It also has into consideration or also takes into consideration your personal parameters, like whether you want that investment to be on the long term side or on the short term side, whether you want that investment to give you higher returns for a longer period, which is fine with you, or medium returns or somewhere near to higher returns with a short period of time. When all these parameters are compared and are put down into one piece of paper or probably one system or application, that will give you differential report. That's when this specific report is used by every management accountancy to further analyze or evaluate different methods where investment can be made and reasonable investment can be made to further analyze how much return can be reap on. So this is what you need to check every point of time when we talk about management or opportunities costing report. Let's understand the next page, that is the differential parts or the different connectivity things that can be used for data sharing. Let's find that thing in the next sheet. So when we talk about data exchange, now that we're using a computer application system, we definitely know that that specific station or that specific system has been stationed at one place. How do you move this data from one system to other? How do you move this data from one person to other? You cannot take the system and go to some different place, correct? You need to transfer that data with different kind of connectivity systems that you have. So that's what you'll be understanding when it comes to data exchange with different systems. Let's understand the first point or the three basic points that have been mentioned down here. Let's go through the first one first. Now, when we talk about data exchange, that means we're talking about connectivity. Connectivity can be via different systems. You might have, if you take an example of your phone, the data that is stored in your phone can be shared via different ways. These days you have WhatsApp, these days you have messengers, you can send it via Bluetooth, you can send it via shared applications, you can send it via USB, you can send it via airdrops. Different modes, different types where you can share the same data into different categories. However, which one is you preferred, which one you think is more secure, which one you think can be absolutely really fast. Depending on all these parameters, you select one specific application or one specific mode that can perform your job. So that's when we talk about the same thing at an enlarged way, whereby you have data connectivities or the connectors which further shares the data from one system to another. This is what you need to know, that when you talk about data connectivity, you might have microwave lens which can be used. You might have different kind of USB systems that can be used. You might have different kind of portable systems that can be used to transfer that data and then further move it to any place that you want. Encrypted transactions data can be also used when we talk about encryptions or 3D dimensional transaction sharing of data, which is completely on the network basis, whereby one data is shared onto the other system using the IP connectors. So IP connectors can be also used, that is the internet protocol connectors, which will further transfer this data from one system to another just in a fraction of a second. Let's understand what are the features do we have about data exchanges. It is fast processing in nature. That means the sharing of data doesn't take hours. It takes only few seconds or minutes. Nowadays, that the transactions or the computers are getting enhanced in such a better way that the platform that are used for transferring this data is completely autonomous, and the transaction goes there, or probably the data is being shared into just few minutes. Maybe you just have data for like good 10 MBs or 15 MBs or 20 MBs, which can be shared within just few seconds. If you have data into GBs, that might just take few more minutes. But as compared to the manual transactions or the manual sharing of data, which takes hours and days, this is completely into autonomous mode, which further can be segregated and further can be divided into different parts and can be shared with different users on different multiple platforms. So this is what you need to understand, that this is, apart from connectivity, it gives you a lot of fast processing details. Let's understand the third and the last part of data exchanges: multiple platforms. Now, when we talk about multiple platforms, we just don't use one specific system. When you talk about one specific phone, it doesn't just work on Android systems. There are different phones that work on iPhone systems, Play Stores, that work on Windows systems, that works on Symbian systems. So you have different systems for different kind of phones. Now, when we talk about computer application system, we have different computers that are working on different systems. Like, it can be worked on Linux, it can be worked on DOS, it can be worked on Windows, it can be worked on Apple's, anything, any different platform. However, the functioning of the computer is as per the specifications that the computer is prepared of. So if the computer has a specification which is of higher end category, that means that computer will perform really fast. If the same PC has a lower end specification or lower category specification, it might work a little slow. However, these days we have all higher end configurations or medium end configurations which are beneficial or probably completely suitable for any organization to work on. We don't need gaming PCs or gaming software applications for any of the organization to be handled for data transfer. However, the basic or the medium level configurations are easy enough and suitable enough for any organization to work on when it comes to computer applications and usage. So this is what you need to understand when it comes to data exchange. First, connectivity, fast processing, and multiple platforms. So this is what we had to explain when it comes to data exchange, reports being formed, or different kind of things we need to understand when it comes to accountancy system or computer accountancy in applications. Applications or computer systems being used every now and then has to go through different kind of enhancements, and if this enhancement has to be done in terms of application system, that's the only limitation that we have when it comes to electronic applications being used. You need to be very updated about all these details. Your system has to be up to date so that you perform all these tasks without any kind of flaws in it. Make sure all these details are completely agreed to and there is no differentials or no derivations from these. Thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.